welcome to the next episode of Buffeting with Kass and Mitch.
Welcome.
Now, this one is going to be a little bit different. We're doing purely stock analysis today of one company. So if you're not interested in a potential 100-bagger, then...
Get your head checked. No, I'm just kidding.
Catch us up next episode. We'll be a little bit more general. But today we are going over one company, EOS. Now, this is not the crypto coin EOS.
No, it's not.
Definitely not. This is on the Australian Stock Exchange. So the ticker is EOS.AX.
And we own, before we started this latest round of deep research that we did, this was like a 5% position. Was going down a bit, was like about 6 when we started it. It's off a little bit. And then based on this new research we've done, we've doubled up. So it's now 11% of the portfolio. And we're feeling really good about it, eh? Like we're feeling pretty pumped. It's a pretty interesting company with a pretty good situation. That's pretty fascinating. So yeah.
Obviously, if you can pick holes in any of our argument, please let us know.
Please.
Because it is 11% of our portfolio now.
Yep. So you'll be helping us.
So we would love to know. Also, this one, we have a video going. Hi.
Hello.
And we also have a presentation.
Yeah, we tried to do it without the presentation, but it's quite complex, this company. And I think that's probably a big reason why we believe it's so cheap. It's because there's a lot of complexity, there's a lot of things that aren't clear, that involve a lot of research and understanding about their products. So, yeah.
It's pretty in-depth. So we've gone with the presentation. So if you are just listening on the podcast, we highly recommend to pop onto YouTube and have a look at the video.
Yep.
Because we will try our best to keep it like audio complete, but you might need to refer back to the screens.
Yes.
To make total sense.
It'll make more sense probably with the slideshow, but fingers crossed it'll still make enough sense in the podcast. But we'll see how we go. So yeah, probably the first thing to say is the company. So as you said, love, the ticker is EOS.AX. Electro Optic Systems. It's a very reasonably priced but very technologically in-depth company. They're in the aerospace segment, which basically means, weapons, technology, space, lasers. This is all the stuff they have in their arsenal, don't they?
Yeah, they're massive nerds.
Massive nerds.
They're all nerds. Everyone at the company. And I think this is why people aren't talking about them and their stock price isn't going crazy.
Yeah.
Because they're just good at what they do.
Yeah.
And they don't know how to really sell the company and the future potential of what the company could be.
Yeah.
As I always say, could you imagine? This is like the Aussie Tesla, except with the fundamentals intact. With a lovely balance sheet at a very cheap price.
Yes. With a whole bunch of other nice, interesting stuff, but it's sort of, it's plus. You get that for free, basically.
Yeah. But if Elon Musk was running this company, you'd know all about it, and its stock price would be 500 times what it is.
Yeah. It's trading at 3 times sales. It'd probably be 500 times sales if it was
probably
Elon at the helm.
And then we'd be shorting it. But...
I don't know. Even then, I think it's pretty good. But yeah.
Yeah. So EOS, let's get on into it.
Let's get into the presentation. So I'll, start us off. They've been growing pretty steadily for the last few years, never really generating significant amounts of profit. They invest a lot of money back in R&D, and that's the main reason we can tell why they haven't been generating huge amounts of cash flow. I'm not sure if they have ever generated positive cash flow, because the company keeps growing and they keep having to reinvest in inventory because it's quite capital intensive what they do. Next slide.
I guess that point, though, is very important because we have kind of labelled this as a potential 100-bagger based on one of those factors being the reinvestment in R&D, which is typically, it's a standout feature of your 100-baggers in history.
Yep. And
it's something to look out for to show the true quality of a business that has a long-term view of trying to reinvest and grow and become something bigger. Yep. It might take longer, but they've got that vision in place, which is cool to look for.
And most of those companies that were talked about in 100-baggers actually weren't profitable either, and they had a lot of R&D spend. So
that's right.
In this second slide, we've just gone through some of those. Yeah, there come some of those boxes that you can tick if you're looking for a 100-bagger. That when that guy did his study, that were apparent basically. So got a long runway for growth. It's in a high technological industry. They have their fingers in a lot of pies with that. It's the right size market cap with the right amount of revenue, actually. So the average market cap for a 100 bagger was 500 million, and the average revenue was 170 million. And EOS is a market cap of 562 and a current revenue of 190. So it's right in that range.
It's right in the pocket, which is, it might not mean anything, but
it's a good place to start.
I think it's a pretty...
It
aligns very nicely, too nicely. But it's also got like all the other factors in there as well.
Definitely.
So you've got a founder-led owner-operator CEO by the name of Ben Green, and he's got a 5% ownership stake in the company, and he has been with the company from the outset.
83, he was part of the company, and he's a physics PhD. He understands technology really well, and yes, from what we can tell, seems to be a very logical, very long-term thinking CEO, which is again what you want to have a potential huge 100-bagger return. It's an established company, so again, you've already got a fair bit of revenue there. Their clients are all government, so it's kind of hard to win a contract. It can be a bit tricky at that stage. Once you've won a contract, it's very good, and the cash flows are sold. Like if the government's your client, you're probably going to get paid, even though the cash flow is a little bumpy.
Yeah, and that kind of would bring a bit of stickiness with it, you would think. Like if they've already got that relationship there with the US government and the Australian government and all the allies under that banner, they have had that relationship for many years now. Yep. And so you'd think that that's pretty stable as a client base.
For sure. And all of it's a very kind of traditional moat in the business, that as far as we can tell. So it's all the technology is patented. It's their own intellectual property. They design products from scratch. In the words of the CEO Ben Green, they don't compete. They design a new product from scratch and then try and create new markets.
Yeah,
for their
and I love when he says they even have new products ready to go. Mm-hmm. But they're not going to bring them out until their current product becomes outdated. Because you're just cannibalizing your own product line because no one's competing with it. So just keep selling what you've got. And as soon as that's outdated, bam, hit them with the new one.
Exactly.
It's a fantastic business model.
Exactly. And that little link there under the high gross margin section there is the link to a talk that he gave to an investing conference about a year ago. And he goes through a lot of the technology. And it's really nice to hear someone talk in the way that he talks, just very calmly, very logically, not very promotional. Probably should be a bit more promotional, but
it's not your typical CEO who's just out to increase the share price. I think he is a PhD with engineering.
Yeah, PhD in physics, I think.
In physics,
yeah.
So this guy is just an intellectual, right? He's not a salesperson, yes. And it's a good thing.
Yeah, that's what you want when you're working for the government. You want to be, executing on what you say you're going to do, and that's the kind of person who's probably quite good at that. So yeah. Okay, next slide. So this is a snapshot of the business. There's 3 segments: defense systems, space systems, and communication systems. And they've only really had one product which they've monetized fully, which is their RWS, remote weapon system. Basically, they don't create the gun, but they create the system and the robot that controls the gun on top of a Humvee. So as the Humvee is driving along, instead of the person, you might have seen I've seen this a few times in movies, you've got a Humvee driving along and you've got a soldier up top, basically manning the gun, which is in a very exposed position. But using their system, all these Humvees ended up being controlled from inside the Humvee, and their hit rate is actually far more accurate than even a highly trained controller of that gun. So it's a win-win, basically. It's more accurate and it's safer for the soldier, and that's why they had such massive success with it, the product.
Yeah, but I guess just like an overview of the business, it is an aerospace entity and a defense systems exporter. So
yes.
Their whole business is in 3 segments, but they all kind of work in synergy with each other.
Yes.
So you've got your defense systems, which is what Mitch was just talking about, the remote weapon system, And then they've got a few other product lines under that as well.
Yes.
And then you've got your space system and your communication system. So there's 3 little arms of the business there.
Yep.
The defense system is kind of what they've worked on the most. Mm-hmm. They've got functioning products and a functioning revenue stream.
Yep.
The space and the communications are kind of the next in line to really grow EOS into something potentially really big.
And I think that's probably why the market has valued it the way it has, is because those technologies aren't producing any cash flow yet. It's taken a long time for us to get to a point where we actually feel like we can understand technologies enough to work out that there is potential to make profit from that. And that's taken us a long time, but it's been an absolutely fascinating journey in terms of learning about how their products work and how incredible they are. So,
it is pushing us kind of to the edge of our circle, though.
It is.
So we've tried our best to understand it. But you know what? If there's any engineers out there who's like, hey, you guys are wrong with this, please let us know.
Oh, man.
It'd be so helpful to have an expert reach out and we can ask you questions. Awesome.
Physics PhDs, come on.
Yeah.
Bring it on.
But just in the final summary of like their defense part of the business, which is where they've proven themselves and kind of proven the moat that they can have in this space. Their product line is 25% better in range and accuracy than a nearest competitor. So that's quite a significant difference between competition. And this is the remote weapon system. Yes. So 25% better in range and accuracy. They've got a 78% hit rate out to 2.2 kilometers. And the previous industry best was 1.5 kilometers. So again, like head and shoulders above competitors in this space. And they've got a world-leading first hit probability at 72%. So that's just to kind of define how good they are at what they do.
Yes, how far above their competitors, and that the best that we can understand it is that advantage comes from their advantage in laser systems, because that's his original competency, is his understanding of lasers, and they really focus on that. That's where they're able to get that incredible accuracy from.
That's right.
Pretty fascinating.
Yeah.
Okay, next slide. Yep, so as we were saying, this is their existing sources of revenue, things that are currently monetized. As you can see at the top there, the RWS is what we were talking about just then. Now they've only collected 1 billion of what they feel, was it 15 billion or 10 billion?
Yeah, they said, like, this is kind of a market that they have created because the US government originally funded them as a research project with like $400 million to create this remote weapon system with the laser technology.
Yep.
And so from that, which was like 20 years ago or something, EOS has now come in and invested in that technology, and they own it as their own IP.
Yep.
But they have kind of turned this into a functioning product that they've tendered out to governments and won contracts for.
Yep.
And now those contracts are coming through, they're delivering on the product, and as soon as the product gets delivered to the client, it's checked and then paid for. And so all of that is kind of, it got disrupted through COVID.
Yep.
But now it's back on track to kind of get back to where they were scheduled to be by the end of this year, hopefully.
Exactly right. And they're due, there's about $100 million of a product that they've transported to the right location where it can be delivered to the client, but there's a whole bunch of processes that they have to go through, testing everything before they can actually receive the cash flow. They were supposed to get the cash flow before Q2. In the most recent announcement, they mentioned that they've pushed that out to Q4, but at the end of the day, it's the government's the client, it's all under contract, the money will come through. It's just taking a little bit longer.
That's right. Yeah, I think some people had some pushback with their last earnings call, wasn't it? In like, they've got this funny thing that they have to convert their inventory to cash, which sounds bizarre, but it's just the kind of business that they're in and the clients that they have.
Yeah.
So government clients, literally all that's involved is like sending them these products, but the products need to be tested and go through all these loops for government security and make sure they work, and only then can that inventory on EOS's balance sheet be converted to cash as like a payment from their client. So
Exactly.
there's a bit of a process involved.
Yep.
And, you know, a bit of understanding, but it's all above board.
Exactly. It doesn't worry us at all, you know, that the fact that the cash flow has been pushed out. You know, the government's good for it.
Yeah, and I think it's these funny little pockets that people are like, oh, that's a bit weird, or that's too difficult, next.
Yep.
And this is where you can find some good opportunities.
Yes, well, that's what we think anyway. Yeah, we're really excited about it. So, great. Next slide. Now, this here, apart from the top, this is the next slide, new sources of revenue not yet monetized. Basically, everything below that top line RWS is all products, apart from the EM solutions, which is that's a functioning business as well. All of that stuff is products that they've developed and they've finished and have not yet monetized or barely monetized. Now, historically, each one of these markets, they've captured 30% of the market, or their goal is to capture 30%, and they feel that's achievable to the extent that they've been able to actually come out and say, look, we think we can get 30% of the market. That second product, there's been no sales. As far as we know, no sales have come from that product yet. But that is, from what we can tell, the world's best anti-drone remote turret. Most accurate, has a whole bunch of different options to take down a drone, with a last resort being actual gunfire. There's a whole bunch of different things, you know, directed energy, all these technologies that they have that they can actually use to take it down. Again, there's been no sales from that, but you can imagine with drones, you know, being as popular as they are now, we're basically one drone terrorist attack away from, you know, thousands of secure locations demanding some kind of drone defense.
Yeah, you can see it being a real problem in the future. I think there've already been some kind of battles that have come up recently.
Yeah.
What was the most recent one? In Azerbaijan? Or?
Yeah, so there was a small little war in Azerbaijan that was basically decided by drone strikes. It's I did a bit of reading about it. It was pretty fascinating. It was a few weeks ago, so I'm a bit crusty on it. But yeah, by all means, look into it. It was I mean, you can imagine if one side had a better drone defense technology than the other, it would have made a huge difference.
Yeah.
And you know, yeah.
I guess this is the point, though. It's just one of their pieces of technology that they have that's fully tested, fully working, and now it's literally just tendering to governments to get contracts to sell this stuff.
Yeah.
And that is just the second item in their defense segment. They've still got a valuable IP in their communications and their space sector that hasn't even been monetized yet, but there's products already there that are just ready to kind of be rolled out and shopped around. So you can definitely see that they're going to capture a bit of the market.
Yep.
You know, they've said 30%. That's reasonable. Looking at the size of these markets, that's substantial revenue streams there from things they already have in existence. So
I mean, if anything like 30% of a 20 billion market comes to this company, you know, with the same margins that they've made historically, it would be a game changer for the company, basically, in terms of the size of the company and the valuation. So,
and this doesn't require any more R&D to be dropped into these products. No. Like they're ready. So, and they get kind of down payments to build the product.
Yep.
Before delivering to the clients. So you literally just, whatever margin they get, whatever market they capture, that's your future cash flow there.
Yeah.
But we can't really put a figure on it.
And that's what makes it hard to value, because, you know, you're not sure when these contracts are coming up. You're not exactly sure how many they're going to win.
No.
You're not exactly sure. It's uncertain. They've got a good track record over the last couple of years of winning contracts, but that's what makes it hard to value. But luckily, there's not too heroic assumptions that are required to actually make the current price make sense.
That's right.
So, next slide. What is SpaceLink?
SpaceLink. So yes, this is in there. Well, I guess it's a combo of the space and the communications sector.
Yes.
For them. But this is like the really exciting part that we hadn't even considered really when we were initial shareholders with 5%. Like we didn't even pay attention to this part, but just recently looking back at it, it's quite a find that we think is really exciting, and I'm not sure if anyone else has kind of noticed it or if it's going to turn out to be what we think it will be.
What we think it is.
but let's talk about it. So SpaceLink, this is a constellation of 3 satellites. They'll be launching 4 satellites as like one backup, but it's a constellation of 3 satellites in what they call the MEO.
Yeah,
the middle Earth orbit.
The MEO orbit. So there's 3 different orbits around the Earth that satellites float in. Low Earth orbit, which is around about 2,000 kilometers from the Earth. Everything between 2,000 kilometers and 30,000, I think, is the middle Earth. And then there's the GEO, which is the outer orbit.
Greater Earth orbit. So these satellites will be functioning in the middle Earth orbit. Most satellites are in the lower Earth orbit, which is very congested. And also these satellites eventually will be optical
enabled. Yes, which what it means is that the first constellation of satellites that they're going to launch is just going to be using the old microwave technology that everyone uses to transmit data. But the second constellation, which is not included in this valuation at all, but the second constellation, they plan to use their laser communication technology, which is actually an incredible way to transmit information securely and quickly. And you can transmit a lot more information using lasers than you can using microwave, which we've been fascinated to learn about.
Yeah, so again, they're at like the forefront of this technology that all their other competitors in the satellite space, everyone's using radio waves.
Yeah.
And from what we've listened to, it's kind of like a natural progression to something a little bit more efficient when broadband requirements, get stretched and we hit a limit, and in future there's going to be like an evolution needed in that space.
Yeah.
So that's like far out. But this SpaceLink program is a solution at the moment for governments who need like greater security for data transmission.
Yep. So an interesting, if you're wondering why they're doing this, this satellite constellation, basically it's only for government clients, and then later they can add other clients. But what it does is when you're trying to transmit data around the Earth through satellites, there's a lot of satellite hopping. If you can imagine the Earth as a ball, and if you can imagine trying to draw a line from one side to the other in terms of a straight signal, well, it's not very easy unless you're high up. So being in the middle Earth orbit and being about 15,000 kilometers away from the Earth, with 3 satellites, you can basically hop a signal from anywhere in the world, from 2 satellites, and then back down to America from anywhere in the world. So that's the goal, and that's why they plan to sell this technology to governments, and there's a huge demand for it as far as I can see.
And the way these 3 satellites work as well, they never lose connectivity with each other, so they're constantly in communication. So it's the connectivity and the secure connection that is crucial for government clients, and this is something that their competitors aren't really offering at the moment.
No. There are a few competitors that we've found who are doing something similar, but it's definitely not a crowded market. And they have those existing relationships with the governments already, and they're a trusted, approved supplier, which is very hard to get approved from what we can tell to be, a supplier of secure communications to, a government like America. It's obviously a very hard thing to get approved for, but they've done that, and they already have those relationships. As far as the economics are concerned for this project, using NPV analysis, so just looking at the cash flows the company projects to come through this satellite constellation, they've given a value per constellation of $1 billion. Satellites only have a life of about 12 years. So they've given us they haven't given us the exact numbers, but we basically agree that the right valuation for this project is somewhere around $1 billion, basically, don't we, love?
Yeah, well, they're giving you a few pieces of the puzzle here, but not the whole thing, because they don't obviously want to come out and say they've got this definite
huge
thing until it is definite. And with government contracts, it's not definite until the contract's signed. So there's a little bit of, piecing together required to kind of come up with what we think
is the real value and what the asset is going to be worth on EOS's balance sheet, basically. So next slide. That's just the company's own image there about explaining the different orbits of satellites and where they're going to be. You can see their MEO middle Earth orbit There's a lot less satellites in there, therefore they last a lot longer. That low Earth orbit is like basically a congested mess as far as we can tell.
Satellites only last like 5 years in LEO. They last about 12 years in MEO and then 15 years in GEO. So I think from my research, like the biggest competitor to EOS in this space is SES, but they provide satellites to a whole spectrum of clients. It's not just government, it's broadcasters, GPS, internet providers. So EOS is purely government at the moment. And also with their function of the optical solution with their satellites, which is
their laser technology.
That's something that SES is not going to compete with them on.
No.
So
they've got a real advantage there.
Yeah.
Okay, so this is basically a snapshot of where the project is at the moment. It's a little bit confusing, but not too confusing. SpaceLink is not going to be part of EOS. So it's going to be a joint venture that's outside of EOS. They're going to put in an SPV, a special purpose vehicle. They're going to get some equity financing from a few different people, and then they're going to get some debt financing as well. They've said the project's going to be financed about 30% equity and about 70% debt, so quite highly levered. But again, it's not recourse to EOS at all. So it's basically a separate company. And the really key point that's incredible is that EOS is not having to contribute any capital whatsoever.
No cash.
Yeah. It's cost them about $5 million so far, from what we can tell from just piecing
some startup costs to get it going.
Just from piecing a few things together.
EOS is only contributing some staff commitments, some of their expertise from their staff.
Yep.
It's kind of the liability is with SpaceLink.
Yeah.
As a separate company.
Exactly. So again, not contributing any capital, but they will be majority owners in this project. So, majority owner, over half of the project is going to be owned, and the control sits with EOS.
That's right. Yeah, well, they haven't said percentages, but they've said they will maintain majority ownership. So we're just going to base that on 51%.
Worst case.
And it could be much better than that.
Yeah, they could own 70% or 80%, depending on, what, I guess, negotiations they have to go through to get the thing over the line. What stage is the project at? Well, if you look at the right-hand side of the slide there, you can see the management team is totally complete. Some very professional people. We've looked into those guys who are in charge of the project. They're very reputable people. Obviously, the technical aspects, the designs of the satellites have already been completed. The manufacturing of the satellites negotiations are quite advanced. And they've already got a lot of interest and a lot of fastening in terms of, I guess you'd say, what are they called again? The MOAs?
MOUs. So I think it's a memorandum of understanding. So they do have signed MOUs from the US government and the Australian government to basically say a contract is imminent on launching the first satellite constellation. So they've got kind of the intention there from the governments, and they expect to have a contract in place very soon. Maybe next meeting we might hear an update on that.
Yes, which is in 9 days, and that's why we've really rushed to get this out there, because we thought that this seems to be something the market is not aware of or not fully considering, and it would be hugely material for EOS's balance sheet to have an asset that we believe is going to be in the vicinity of $500 million for this project. Once another equity partner has come on board and has actually invested in the project, then you have a valuation for their stake, and they can then put that valuation on their balance sheet, or at least that's where we feel is going to happen.
Yeah, it seems like they're really in the final stages of getting all the final I's dotted and T's crossed.
Yep.
So let's get on to the next slide, because that's kind of the question is, what is it worth?
What's it worth?
If this does eventuate, what is it worth?
So, the company plans to launch additional constellations in the future. They put the valuation on this constellation asset at $1 billion. I sent the following email. You can see that email on the right-hand side of the company. Just I couldn't quite get my head around exactly how the balance sheet of this new company was going to look. But you can see that they've responded there, that they've, you got to read between the lines a little bit, I guess.
Yeah.
And they obviously can't say too much. But when someone says that your logic sounds reasonable and I can see how you've reached your conclusion, I think that it's reasonable to assume that my valuation, which agrees with their valuation of $1 billion for the satellite constellation, is probably what we should be expecting.
Yeah, so basically we're expecting a $500 million asset to drop onto their balance sheet upon the signing of a contract.
Yeah.
With no additional outlay required by EOS. So this asset is going to be put on their balance sheet based on no investment by them, a bit of their staff's time, and this joint venture going ahead and the contracts going through. So I guess the email there from Neil Carter, who is their new strategy officer, I mean, you can kind of take it as a yes, you're correct, or no, you're not correct.
Up to you. But that's why I felt I wanted to include it, because, I just wanted to get it out there. If we know it, then I want other people to know it as well, basically. So
yeah, you think if you were really off target, he would have said no, you're wrong. But anyway, we'll find out eventually, won't we?
We'll find out maybe in 9 days whether I've read that email totally off. But yeah, it's it was very, very interesting. And by all means, if you got any more questions about that email or any more detail, just by all means, send us a message through on Twitter, and I'll be happy to kind of explain more about it. So yeah, okay. So this is the important bit, the valuation. Doing a normal discounted cash flow is a bit hard because it's really hard to work out when the contracts are going to be awarded, and the profit recognition and the cash flow. It's a bit challenging, but based on contracts that they already have, and based on the analysts' estimates and our estimates who have gone through some of these contracts, EOS is trading on about 10 times earnings for 2022.
Let's just repeat that. 10 times earnings. Have we seen that in the past 6 months?
Yeah. For those of you who are too young to know what 10 times earnings is, well, look, they haven't made the earnings yet, but it's a very cheap price considering all of the crazy technology and all of the IP and all of the incredible things this company can do. It's a very cheap valuation. And then when you look at it in terms of asset value, so the current book value is $370 million. There's no debt in the balance sheet at all.
No debt at all, yeah.
And they have this tendency to write down all of their assets to zero as soon as they spend the money on them. So they've got a space research centre in Canberra that was built as part of a $200 million investment, and a second facility in Western Australia, both 100% owned by EOS and not on the balance sheet.
Not on the balance sheet.
Why put it on there?
You just get all this stuff for free. It's not written anywhere, but
sure. If they ever needed to monetize that, I'm sure they could do some kind of sale leaseback thing or something. Who knows? But again, not on the balance sheet, a real hard asset there. And again, this majority stake in this special purpose vehicle currently not in the balance sheet. And the
SpaceLink, yeah.
And the fact that the company is trading at 10 times 2022 earnings, again, based on none of those products that we mentioned, getting huge contract wins or anything, based only on the contracts that they've already won, it's a pretty crazy cheap valuation, which is why when we got to this point of it, and after checking everything, we doubled up and it's now 11% of the portfolio.
Yeah. So, are we missing something? We can't find it.
We've tried.
I don't know.
We've tried pretty hard to find, something we're missing here. There are some risks we've gone through at the end, which we'll go through, which we can see. Yeah. By all means, as always, check all of this information, check our facts, check our reasoning, make up your own mind. But yeah, we're feeling pretty comfortable that considering what you're getting and considering the price you're paying for the earnings that are looked in, it's got a lot of positives.
Yeah.
And what else do you get for free?
This is just a bonus round, people.
Couple of things.
Well, the first point is the satellite constellations again, which we kind of touched on already.
Yep.
But I feel like the optical component of these satellites, which is forefront of this technology, it's a quicker, more secure more efficient way of transmitting data from space back to ground stations on Earth.
Yes.
And you just think in the future, we're going to need more internet.
We're going to need more data.
We're going to need faster internet.
Faster data transmission. Yep.
It's just like, and they already own this IP.
Yeah.
Right? There's nothing more to be developed. They have it. It's just a matter of when the need presents itself.
And as Ben Green...
There's a solution.
Exactly. And as Ben Green said in a couple of different presentations, there's about $1 trillion of sunk cost, which is going to the old technology. And that's why it's still being used. It's not necessarily because it's really good at transmitting data.
No.
From what he said, this technology that they've designed can transmit data a lot faster and a lot easier, a lot more accurately. But yeah, this kind of historical way of doing things is what's held it up. So if we do get to the point where we're desperate for more data, you could easily see this technology. Again, you're not paying for this. This is totally free, but they do have this technology.
They own it, yeah. I mean, the downside with this is that, everything needs to be updated in order to use this new technology.
Sure.
It's not going to fit with our current radio wave system.
Yep.
So, but, it's just a future bonus that you never know what could come from it. It's cool to have in the bank.
For sure.
The other breakthrough as well that they own is a laser technology which basically destroys space junk.
That's right. They own lasers that pa-choo.
Star Wars, anyone? Why aren't they making like lightsabers?
I don't know. They should definitely make some lightsabers. That would definitely get the investing community excited.
But anyway, the LEO orbit, at least, that is so congested. There's so much shit up there. Tesla's about to launch 12,000 new satellites to go up there as well.
Yep.
So that's even just going to get more full.
More congested.
So a laser to shoot down stuff or move it out of the way.
Yeah. Sure,
that's going to be useful at some point.
Exactly.
Anyway, they've got it.
As they said there, about halfway into that paragraph from the bottom, the technology is to form laser beams that can track and move space debris at lower altitudes and faster speeds than ever previously possible. The IP was developed by EOS, blah, blah, blah. Again, you're not paying for that. No, so, interesting.
Something else. They're just geniuses. And no one's hearing about it.
Well, not yet. Fingers crossed. Cool. So now risks. I failed physics in high school.
You did. And we both did Math B
together next
to each other, and you stole all my answers.
I did.
And I didn't really pay that much attention anyway.
So despite loving science and, I've really enjoyed looking at this company, I would not consider myself, or I don't think you consider yourself either, Love, experts on if they really do have the best technology.
No,
they really are well
absolutely not.
And even if we were experts, it's very hard to tell because you've got governments developing technology, and so it's a very competitive field. But the fact that they've won these contracts, and they've been able to get these guns to be so much more accurate using their laser technology has definitely given us a lot of confidence, hasn't it?
I think so, yeah. The fact that a competitor might be able to come in and bring out a new version of technology that's going to make EOS's stuff redundant.
Yep.
Sure, that could happen.
It's something we'll be monitoring, I think, for sure. Ongoing, we'll be looking for that kind of stuff.
Yeah, it's a risk to be always conscious of.
For sure. Yep, contracts, governments can be funny. It takes a while to win one. The cash flow is unpredictable. It comes, but obviously the government's good for it, which is a positive thing. Obviously there's risks around SpaceLink. Although, like we were saying before, you're not really even paying for SpaceLink. Before it was announced, the share price was actually higher. So the share price,
I know.
The share price has come down 20% since they announced they were doing SpaceLink. So somehow that project seems to be
I don't know,
costing the company money.
I think the only shareholder question regarding that was how are you guys going to get payment back for the $5 million you spent on startup costs for SpaceLink? And basically the CEO was like, honestly, that's not even a factor if you account for what's going to happen to the balance sheet.
Yeah.
Without saying too much, he was like, really,
you're asking about the
zoom out, people.
You're asking about the $5 million, yeah.
Yeah. Saying that though, contracts with governments, US governments looking a little flimsy at the moment. They might not be good for it, but that's another one to put on the risk sheet.
Yeah, sure. But 10 times earnings accounts for a lot of uncertainty. So there is uncertainty, but that's we feel you're being paid for it. The share dilution is something that's been an issue a couple of times. So a couple of times they've had orders that are larger than they expected, I assume, and they've had to raise capital. The market loved that. I think the last time it happened, no problem at all. Share price wasn't affected really. This time the share price was affected. During COVID, they had a massive order that was due to be delivered during COVID, and obviously that affected
everything.
Their ability.
Just got on standstill,
Yep.
and everything was deferred like 6 months to a year.
Yep.
So none of the contracts were cancelled. No unhappy customers. Everything has literally just been deferred for about a year till they could start up again.
And share price down, roughly 30% in that time.
Yeah, but these guys, I mean, they do seem to dilute shares over taking on debt.
Yep.
I don't know if that's just they feel better cash flow wise, not having debt on their balance sheet, or what that's about. But it's not really a concern for us.
No, when we've gone back and looked at it, it seems like every time they raise capital, the cost of that capital was offset by the use they were using it for. So it doesn't really concern us, although it's something to watch. Now, this is kind of a different risk. The fact is that they do seem like scientists, and I do wonder, and we were both discussing this, like if they're really interested in trying to make huge amounts of profit from the technology, or are they more interested in developing technology? And people have different motivations for running businesses, but they have been looking like they're moving more towards trying to generate large profits from this technology base that they have. So that's a risk. And there's recently been a new CFO and a new chief strategy officer appointed. So
we're hoping these guys are coming on board now to kind of monetize the business and make it,
a bit more investor
financially attractive for investors. So we'll see what they do.
Yeah, well, let's check back in a few years and see if they've been able to, monetize things a bit better. And the last risk is just, like any company that operates overseas, the currency movement could be a factor. So if the US dollar was to move in a big way and they were making money in US dollars, transmitting that money back,
converting it back to Australian dollar, it's gonna
would be a negative.
But
so something to think about. But yeah, that's the end of our presentation. I guess thanks very much for listening.
We hope it all made sense.
You go.
Yeah, if you've got anything to add or any more questions, or you've got more information for us, please let us know. We would love to hear about it. Especially
when it comes to the science and that question around their laser technology versus the existing system. I'd love to talk to somebody who has a bit of expertise in that area, who can let us know, yes, they actually are, at the forefront of technology here, or they're not. Like, that would be awesome to know, eh?
It would be, yeah.
Be really good. But, this is a bit of a different podcast, a bit more serious than we're usually used to, but we've been working pretty hard on this one, and we're pretty excited about it, so we just wanted to get it out there to everyone and give everyone a chance to make their mind up, hopefully before they announce this new asset in the balance sheet. Again, could be wrong, but all signs point to positive developments in the near future. We will find out. Next episode will probably be a little bit more general, more conversational, so tune back in then. Thanks for listening. Bye. Bye. If you got this far, thank you so much for listening. We really hope you enjoyed the conversation. Now, if you'd like to become my 22nd or my 43rd follower on Twitter, links are in the show notes below. Mitch, anything else? Nothing to add.